Good afternoon, ladies and gentlemen. A very warm welcome to everyone present here for our event on Fix India Working Group Seminar. I would now like to invite back to stage Mr. Pramod Koyoti and Mr. Govind Patnaik to share a few updates on Fix.
Hey, good evening all. I think it's a great setup that we have got here today, and really thankful to National Stock Exchange and Sir to be here and started with a welcoming note. It is always a pleasure to come here and have connect with National Stock Exchange, speak something. On behalf of Fix community as a co-chair and my person Govind who would be along with me. Just wanted to begin with, as an introduction to Fix community and what we do and what they are. So as an introduction, Fix community is the non-profit industry-driven organization behind a Fix protocol. It is a messaging standard that underpins how the institutional world trades. And for last 30 years, we have been actively into the same global markets and the way they have begun in the electronic trading. In fact, the standardized electronic trading that they have been started, and today we are connecting across the pre-trade, trade, and the post-trade on the workflow side, and on the asset and on the other asset classes that we have been done. It has been equities, derivatives, FX, and more to begin in the way that we are doing. But Fix is not a protocol; it is a community, a global ecosystem of market participants committed to working together to improve the efficiency. We are looking into the transparency, and we are also looking into interoperability across the market. The core strength at the Fix is the way of the organization operates. It is the committee and the working group that we have been putting together, and it has been always been driven by the industry volunteers, all of us that have been here, and people from the buy side, sell firms, exchanges, technology, custodians, and the regulators, not to be left with, but they all are the part of it. Being as a working group in India, we are with the same spirit, we work with the same idea, and we collaborate and we support with the system, we work here. Today, I would also like to highlight some of our global Fix initiatives currently shaping the future of the electronic trading. So basically, it is the Fix Orchestra, which gives about the standard machine-readable rules. Second is the Fix simple binary codes, which is more on the high-performance coding system designed in. Third is the digital asset and the smart contracts. It is the Fix continues behind on the Fix digital asset trading, including the current initiatives that we have been mapped on the tags. AI and machine learning, that is the final one, which we have been exploring on from the Fix side. It is mainly focusing on the interoperability and the traditional workflow for the trading. So generally, with all this, what we're trying to do here is more supporting on the workflow and on the trading, both on the trade, pre-trade, and the post-trade. Finally, the only word that I would want to say is to get involved with the Fix community and how we can do that. One is, be with the Fix committee or with us a working group, which will be enhance our working initiatives. Second is to explore through the resources, to the standards, and the upcoming events that the Fix is coming up. And third, of course, obviously, it is from your company if they can get the member, and which will become a big support for the development of the protocol and give access to the global network and shape our futures. Again, thanks a lot for being here and as giving us a continuous support for the Fix community and as a Fix in India. I think we would be, in terms of strengthening our Fix community working here to get more events to come up, and with an association of the exchanges, we want this to be keep going and come across with a great support. I think we should ensure India continues to play as a leading role in the global trading landscape. And I think with such a support, I think we should be surely reaching there. Over to Rohit for the rest of the sessions. And thanks again for being here.
Thank you for that enlightening session. I would now like to invite Dr. Dipesh Shah, Executive Director, International Financial Services Centers Authority, who would be joining us virtually to shed some light on GIFT City, its growth, products, and performance.
Yeah, good evening, and thank you very much for inviting me to this important conference on Fix India Working Group. And my special regards to Ashish for I just was hearing his opening remarks. I think very encouraging time for India in terms of what is happening, and also what is happening at GIFT is another piece which I'm sure the people in this room would be keen to know. I've been given a topic of GIFT City, its growth, products, and performance. So let me cover this in a 10 minutes small presentation that I've prepared for this conference. I would like to share the presentation and just wanted to reconfirm that you are able to see the PPT on the screen. Okay, I understand from the message that you are able to see this. GIFT, I'm sure most of you are aware of in terms of what is happening in the financial center. But I'm sure you are also aware of the larger objective of the GIFT City in terms of how the offshore center in GIFT City is trying to enable several international financial services business in India. I'm sure you are able to see the slide, which right now titles the capital and service flow from the global financial center. And this particular aspect of what has gone out and how it is coming back into India. And if you can see this slide, I think probably you can imagine what was happening, the scenario before the GIFT came into existence and what is GIFT trying to achieve now. I think what was happening before is probably very important to know that for most of the India international business, we've been taken to several financial center outside, whether it was Singapore, Dubai, Mauritius, or as far as Luxembourg, Ireland, even for ship leasing, we went to Dubai. So several areas for which Indian growth, which was witnessed, was getting addressed or been promoted through the financial centers outside. So GIFT came at a time when the Honorable Prime Minister's initiative in the state of Gujarat as the Chief Minister was probably trying to achieve something unprecedented in terms of what was envisaged. And also way back, as I recollect, since 2008, I'm in GIFT. I recollect that people say that, look, this may or may not be possible in terms of what you are trying to achieve, because the financial centers outside are much more robust in terms of regulations, tax policies, and the way the whole system operates, including the ease of doing business. But I think what we have seen in last 10 years journey is to most of the businesses which have gone out, there is a possibility and a window to bring them back through GIFT City into India. And my presentation today captures exactly the movements of what has happened in last 5 years in terms of data points, how the GIFT has grown, what are the products which have started performing, and what could be expected in future in terms of this financial center in India. I'm sure you are aware that GIFT is in the state of Gujarat, very close to the airport. It's a walk to work as a concept and created several commercial, residential, and social facilities within the GIFT ecosystem. But I think what is important is the slide which you see now, for just to quickly understand how GIFT is now trying to be mapped with the other global financial centers. So what you see, GIFT under the foreign exchange law of India is a non-resident, and also from an international perspective, it is also non-resident. So examining the column 1 is Singapore, column 2 is GIFT, and column 3 is India. So we are mapped as far as the financial center is concerned with the global peers or the global financial centers outside. And under the FEMA, having GIFT as a non-resident was the most important starting point for the financial center to get started. We transact in several currency, including 15 convertible foreign currency. In fact, Indian rupee is not permitted to be transacted when you transact from GIFT into India or outside. So INR is not permitted. Rest all the 15 international currencies in which you can transact. Tax holiday, there is a parity now given with the offshore centers. Out of 15, any 10 years you can choose. There is no tax on the business profits that you earn in GIFT. Law wise, we are India, but we've been given several carve outs from the Indian law. And the regulator wise, we operate as a unified regulator, as an IFFC authority, versus what you see in the rest of India, where you have financial regulators for different services. We are comparable to what Monetary Authority of Singapore for a financial services today do. So from a financial center perspective, what you see probably on the screen is these are the activities which is now functional within the GIFT City ecosystem. In the bracket, you can also see the number of licenses issued by the IFFC authority. So you can see now large number of transactions or the entities registered in several segments, including banks, stock exchanges, asset management, insurance, reinsurance, even TechFin firms, finance companies, and foreign universities. They all now operate from the GIFT City ecosystem in a much larger space, with creating almost 28 to 30,000 jobs in the overall GIFT City ecosystem now from a fintech perspective. I'm sure this is an important slide where most of you will be putting your eyes to, because most of the time they only remember this slide when we present, that this gives you out of 15, 10 years tax holiday, no GST, because this is SEZ. And obviously there are several other tax exemptions provided, including incentives from the state governments when you operate from the GIFT City. In terms of the key entities or some of the important entities which have already entered GIFT City, I'm sure from a banking side, from a capital market side, alternate investment funds, fintech firms, you can see some of the large number of institutions globally are now present, including the Indian large institutions, including the NSE running that international exchange in GIFT City now, and also running the GIFT Nifty as an important dollar product from this zone. So you can see the whole financial ecosystem is now present within the GIFT. And in terms of the business transactions which have happened from the GIFT City, I'm sure this growth numbers and the performance would help you to understand how the products have evolved in GIFT City. I think the first most important criteria for a financial center is number of registrations, and we have crossed 1,000 plus now. In last year itself, we have crossed 270 plus registrations in the financial center. We are now 35 plus business segments, and also in last 5 years or so, we have granted more than 950 licenses in the IFFC zone now, after the unified regulator has taken over the zone. Number of foreign entities operating in GIFT has also crossed 100 plus now, and obviously they were the one who were fence-sitting in the earlier days, but we are seeing continuously they are the one who are now setting up in a much faster scale and size than even the Indian firms coming into the GIFT City zone. Number of people working in the financial zone itself across 8 to 9,000, and in the overall GIFT City around 28,000 to 30,000 jobs. But the last but most important point which you see on this slide is the capital flows into India. The $58 billion has moved from GIFT into India. And I'm sure people sitting in this room could argue that why we needed GIFT, or why the financial center, or what is the benefit of this financial center. Probably this number gives you a clear indication that the policy and the regulations of the government of India started working. We got $50 billion as a bank credit flown from GIFT into India, and almost $8 to $9 billion in the fund industry from GIFT, which have been invested into the Indian ecosystem. As I said, we have 35 banks, almost $100 billion banking asset size. You name probably a foreign bank, and probably they are present in GIFT City now. In fact, the last 2 licenses we have been received application is from a Taiwanese banks now entering into GIFT City. So we have banks from US, UK, Singapore, Japan. We have from several parts of the world present, and they are all taking the Indian corporate borrowings, all getting housed in GIFT City now. We're also seeing large external commercial borrowing. In fact, 36 to 40% of India's ECB now comes from GIFT City into India. We have just issued our bulletin, and almost 76% of funding by the Indian bank, by the banks in GIFT have gone into India, and 25% of the funding from the banks in GIFT has gone outside India. So it has started working both as an inbound and outbound gateway from both perspective. We've also seen from a capital market side, I think large number of transactions in the monthly turnover on the exchanges. As I mentioned, GIFT Nifty is one of the largest contributor today in the ecosystem. We have also cumulative debt listing of almost $67 billion now in GIFT, and the ESG listing is almost $16 billion into GIFT, and many Indian and foreign corporates are now choosing to list primarily into GIFT ecosystem. On the fund industry, which is one of the fastest growing industry within the GIFT City ecosystem, we have seen 194 plus fund managers now, almost 310 funds registered with us, and they've got $100 billion, $11 billion of investments which have been done, out of which 8 billion gone into India and 3 billion has been invested from GIFT outside. So we have also seen now outbound to outbound funds coming in. So for example, a fund coming from outside India, setting up in GIFT and investing outside. That is also become a reality in GIFT City ecosystem now. Players like Morgan Stanley, PAG, Franklin Templeton, Oaktree, Mirae Assets, DSP, they all are now operating the larger piece of mutual funds for Indian investors and also for NRIs into the GIFT City ecosystem. In terms of insurance, we have almost 52 firms now, and we've been seeing large number of foreign reinsurance entering the IFFC zone. So probably the numbers will help you to understand that insurance also is becoming an important aspect of the financial center at GIFT. We've also seen fintech firms emerging because of a unified regulator. The fintech provides a great platform to innovate because you are innovating from all the financial regulators at one place. And we've seen many of them now transited into a commercial entities within the GIFT City ecosystem. We've also seen TechFin firms, which is our new additions, like likes of Infosys, Cognizant, and Wipro. They have entered the GIFT City with starting from 1,000 to 10,000 jobs being announced. So they have started with 500 to 1,000 jobs, but they are all gearing up to house 5 to 10,000 jobs within the GIFT City ecosystem. So you will see large number of tech players coming in. Very important slide, probably from an India perspective, that aircraft and ship leasing, this business was not present in India before. And as a regulation, we tried to work with the government, and the government's efforts of the whole of government approach in these two segments has given a very encouraging response. So you can see almost 37 aircraft lessors with 300 plus assets leased into India by this lessor. Even there are lessors which have leased aircraft from GIFT outside of India. And that is again probably a new area emerging from the GIFT City ecosystem. Recently, you might have seen through the filings by the Indigo that they've announced 7,000 crore plus investment in their IFFC leasing arm. So they've created a leasing arm along with Air India. Air India also created a leasing arm which is leasing the aircraft into India from GIFT City now. Ship leasing, it was a new activity for us just 1.5 years back. 34 lessors now, 28 ships were leased into India, and already players like CMA CGM from France and Mitsui OSK from Japan, Transworld from UAE and DP World from UAE, they all are registered with us in the ecosystem. Foreign universities, I think it has become reality now. Indian talent which was going out for studies probably now have a stopover at GIFT. They can study the same, get the same degree what they used to get in Australia, UK, and other parts of the world. They are getting the same degree at half the cost, and obviously the living expenses also reduces drastically. So for them, it's a great opportunity to work in India, study in India, and probably do all that at half the cost, which would otherwise would have been very high for them and their parents when they study outside of India. So this is becoming an important avenue. We have Deakin University, University of Wollongong from Australia already operating. We have given licenses to Queen Belfast from UK, Coventry and Surrey from UK, which are all starting in 2026, their universities in GIFT. We also have a Bullion exchange, which is one of the spot exchange that we run here, and that is also trying to come up in terms of the new products and new services being offered from the IFSC zone. We also have an professional service providers and bookkeeping and accounting, and that also ecosystem has grown very rapidly. A lot of law firms, accounting firms, consultancy firms are now part of the ecosystem here, and several back-end operations for global firms from a global capability center and all operating from GIFT. So that was probably the last slide, and I thanks the organizer for bearing with us, that allowing us to come online today. I was scheduled to be with all of you, but unfortunately today the government of India has sent the entire national media at GIFT City. So we've been here since morning. They've been going through the several presentation and discussions around the GIFT City, but it's a great opportunity to be part of the FIX community and been addressing all of you today. I wish I could have been made it physically there and probably met some of you for your future potential setting up of your operations in GIFT City. But thank you very much, organizers, for bearing with us and allowing us to present through the video conferencing. Thank you all.
That was a very fascinating session. We now move on to a very exciting part of today's event, the panel discussion on shaping liquidity and access in Indian markets, where some of the finest minds in the industry will share their views and experience. To steer this conversation and bring out diverse perspectives, I would like to invite Mr. Rohit Mandotra from NSE Business Development Investor Relationships as moderator to take over the proceedings. Joining him on this panel as speakers are, first we have Mr. Suryadeep Das, Director ETS from Kotak Institutional Equities. Next, we are delighted to have Mr. Pankaj Dhake, Electronic Sales Trader from Morgan Stanley. And finally, we have again Mr. Govind Patnaik. A very warm welcome to all our panelists. With that, I hand over the session to our moderator, Mr. Rohit Mandotra, to lead us through what I'm sure will be a very interesting discussion. Thank you.
Thank you, Shreya. And a very good afternoon to all of you. Just to set the context, I think Ashish, our MD, already gave you big numbers. So I don't want to repeat them. But, you know, the conversation today is more in terms of how we are evolving. And I had the investor relationships for NSE. I will have some questions, some tough ones, some easy ones, some I would not say controversial, but some interesting ones, so that the panelists can actually answer, so that we have a perspective in terms of where we are going. So quick round of introduction, and then I'll start with it.
Hi, everyone. For those of you who don't know me, I'm Suryadeep. I look after the electronic trading business in Kotak Institutional Equities.
Hi, I'm Pankaj. So I am an electronic sales trader at Morgan Stanley. I've been with the firm for the past couple of years.
Hello, everyone. I'm Govind Patnaik. I'm with Franklin Templeton, one of the buy-side firms in India. So I've spent like over close to 20 years in the firm. So I'm very happy to be here to share my perspectives. Thank you.
So, this is something that we had last year as well. And some of the, broader themes have really remained same in terms, but we'll touch upon some new ones. And to start with, what I want to kind of get a perspective on is on the institutional flows, because, you are the ones who are handling most of the institutions from a India versus an APAC and a global perspective. So, how do you see that the profile of the flows have changed or they evolved? Because we've seen a lot of changes in the Indian eco system in terms of contract sizes and the number of contracts, tick size changes, margining. So how is that evolving? I'll start with you.
Okay, that's a pretty large topic if you were to point out institutional flows. I mean, one thing which is like very surprising, which has not changed, is the very strong momentum we have been seeing in domestic institutional flows. I mean, last year we crossed 5 trillion rupees INR in terms of domestic institutional flows, net buying coming into the market. This year, with the environment, we were like, wishing where would it go and things like that, especially when we were seeing some sharp sell-off in the foreign institutional side, and there were some global geopolitical turmoils also. Surprise, surprise. As of end of last month, we have crossed 5.5 trillion rupees. So that momentum is very, very strong, which has come as a pleasant surprise to all of us. Yes, the foreign flows, they are subject to some larger macro risk, which are not under our control. But what we are seeing, what we are looking at, things are definitely looking very, very prospective. Maybe my other participants can put in some more light.
Thanks, Rohit, and thanks, Suryadeep, for sharing your insights. So I'd like to address the question from two parts. So firstly, I would like to speak about how the institutional turnover is as a proportion of total market turnover in the global markets and in the Asia markets. So now if you look at the developed markets of US, Europe, institutional turnover is typically 90% and retail is just about 10%. In Asia as well, retail being a higher proportion of volumes is a pretty much Asia phenomena. So as I said, right, like retail is 10% of total volumes in US, Europe. In Asia, it's typically 25 to 35%. In India, it's about 35%. Hong Kong, it's about 25%. Now, if we look at the institutional turnover, it's broadly stayed in 25 to 30% as a proportion of total trading in India. That's lower compared to like the developed markets of Hong Kong and Japan. Japan, it's about 60%. Hong Kong is about 50%. So yeah, the skew is correctly there. So it's been about a decade I've been tracking it. It's moved around that levels of about 25 to 30%. The mix has, as Suryadeep correctly pointed out, right? The mix has changed a lot, right? Like because a decade back, FIIs used to be 21% of the total volumes. DIIs were just about 9%. Now we are looking at a situation where FIIs and DIIs are neck to neck, right? So pretty much 15%. In fact, the start of the year for about 2 months, DIIs were ahead of FIIs in terms of the total turnover. I think, yeah, as you correctly said, right, the turnover has exploded more so on the derivative side, right? Because if you look at 2019, like the period before COVID and now, the equity turnover has seen a multiplier effect of about 3x, right? Whereas if you look at the options turnover, it's seen a 10x multiple in terms of premium. Futures is about 2x, right? So yeah, the growth on options side has been more, right? So I think I'll stop here with this. Yeah.
Thanks, Pankaj and Surya. I think you guys covered most of the stuff when it comes to institutional flows being on the rise and a good mix of, say, foreign and domestic, I would say, in terms of proportion. What is really fascinating is the momentum that we are seeing. So last 1 year has been a tough year when it comes to foreign flows. We have seen, I mean, selling off to the tune of $40 to $50 billion in last, I would say, 10, 11 months. But despite this, we are at all-time high today. Just speaks volumes about how the, I would say, the local liquidity, our local flows have been so strong. So I think it's a combination of exchanges being, I would say, more tech savvy. Now we see a lot of young people around more interested in investing in the markets. A lot of avenues now. It's easy to invest through a lot of these new age apps. So I think from the momentum perspective, I think we are really possibly in a best phase, what I can say. And FPI ownership is at a 14-year low, so which is at 17.5%, down from 22%. So which can only go up from here. I feel it's just about the macro trends. So as Surya pointed out, for foreign investors, there are so many factors: interest rates, forex, how the macro trends are, how the trade now the trade deals have become an integral part of a decision making on which markets to go. So I think we have seen possibly the most challenging phase and have done reasonably well. So I feel very optimistic that it can just turn around from an FII perspective. So if that kind of turns around, then I think we are definitely heading to some new records.
Sure. So, what I hear is it's a mix in terms of how the divide has been from a foreign institutional participation versus domestics. But on that, just to follow up, I mean, when we go out and meet institutions across the globe, India is something that kind of litters up in the eyes that okay, this is something that we want. So from a volume perspective, value perspective, it has gone up, but as a proportion of market, it has gone down. So how do you define that? I mean, while we say that the FIs will come back, is it that India is just another market, or is it that structurally India has become an important market for these financial institutions from a long-term perspective?
Yeah, so I think it has definitely become a important market in a global context and in a regional Asia Pacific markets, definitely. As you said, right, like the volumes have increased. Now, what happened over the past 1 year was we had a range-bound market movement because we obviously coincidentally made an all-time highs today, which is great. The previous highs were somewhere a year back, right? Like October 2024. So you might look at that 1 year where you have a very range bound period. You might feel a year is longer to make all-time highs. But you know what's in fact even longer, because this year the talk has been about Hong Kong, China outperforming, giving that 30% return. But if you look at the CSI 300 index, it's still not reached the levels it reached in 2007. So it's been about 2 decades of, you can say, zero returns, right? So yeah, like for FIIs, because China, Hong Kong has started outperforming, seen a rally. In fact, the last highs that Nifty made was coincidentally when China started rallying. It wasn't coincidentally, but yeah, because yeah, FII started moving the money from India to the outperforming markets of China, Hong Kong. But yeah, I think in the medium term, this is just a blink, and we are here to stay. So yeah.
So just to continue on that, Surya, you are from Kotak and domestic institution. What is your 2-minute pitch to a new investor when you see this, a foreign institutional investor?
Okay, so today I see India at probably like a third place in MSCI EM index in terms of weightage at around 15%. Roughly a year back, it briefly hit number 1 in the mid-20s and then came off a little bit. But it did not really come off as much as the other markets went up. If you see year on year, India is kind of pretty much flat, whereas China, Korea, Taiwan, they have gone up very, very sharply. So my pitch is that, okay, from here, we can only go up. And we are always looking at a market from a potential perspective. And I think we are placed really, really well. And one of the things that we keep on saying is that about a year back, maybe a couple of years back, people were talking a lot about valuations and all that. We have been, if you have been reading some of the macro reports that we have been coming out with, we are seeing signs where essentially manufacturing is picking up. There's a lot